Good evening, everyone. Good evening and welcome to this evening's webinar. My name is Adam Harris and I'm presenting to you this evening from London in the United Kingdom. And as you can tell from my accent, I'm half English and half South African, so you can pick up the accent there. And welcome to this evening's presentation. We're going to be having basically getting a catch up on commodities and currencies, going through the markets, doing a market scan and developing a watch list for trading opportunities over the coming days and weeks. And obviously this brought to you by myself, Adam, from Trade with Precision, and obviously part of ATFX's team. So first, I'd like to do a quick sound check just to make sure that you can hear me. If you can, please feel free to type into the questions box as we go. If there's anything you want me to have a look at or any questions you want me to answer, I will do my best to do that. Just feel free to type it into the questions box. So assuming now that you can hear me, thank you very much. There we go. And I'm always curious, by the way, where in the world you're listening in from. So if you are outside the UK, please let me know. I'm always curious about that. All right, we get everyone from all over the world. It's always a good thing. So there are two disclaimers. I need to give you a moment to digest those before we continue. And while we're doing that, if you do hear a random bark in the background, I have a puppy, and the puppy has decided that now is playtime, despite the fact that my partner is, unfortunately, she hasn't got home yet, so please bear with me. So a little bit about me. I am a fund trader. I'm based in the UK. I'm a trend trader and a swing trader. So basically that means that I'm entering on the 4-hourly and daily timeframes for most of my trades. And I trade as many markets as possible, and I only trade in the direction of the trend. And so that's really it. And so I'm going to be applying and demonstrating quite a bit of that in front of you and trying to relay within the next 60 minutes or less as much as I possibly can without drowning you in that information. All right, so let's go to the next slide. And what else did I want to let you know? South Africa, thank you. I was going to guess with that surname, so thank you very much. I'm curious, are you from Johannesburg, Cape Town, PE, Durban? I'm always curious. I can't hear your voice, I can't tell. So again, I'd like this to be as interactive as possible. Please feel free to ask questions as we go. All right. Right, I think that's enough time on those disclaimers. Let's kick off now. This webinar is really intended ideally for absolute beginners. All right, for absolute beginners, those of you new to trading, remember that everybody in the history of trading started knowing nothing about the financial markets. So it is a learnable skill. It's very good to compare it to a language, learning a new language, a musical instrument, or professional sport, just to give you a sense of that. And keeping it simple and getting some good education is usually the best solution there. It's also better to think of trading as a sport in terms of the fact that with sport, we understand that training, discipline, rest, our mental state, our fitness level, so to speak, are all part of the success or the secret to success. And also the fact that winning isn't guaranteed, but it does come with practice and so on and so forth. So it just is a much healthier way to approach it. So on our agenda this evening, we're going to be having a look at the major currency pairs. We'll also go and we'll have a look at oil, break it down. We'll then have a look at the other commodities, gold, any other precious metals, and then find out what features on our watch list in terms of currencies or commodities or both. Yes, I know. So I think we can kick off at this time. Usually there's a couple of slides at the end of the presentation, and I'm considering that I should just go through those now, and then I can go to the platform and we can relax. So just to give you some information, a little bit of background information about ATFX, if you're not familiar with them, they are regulated by the FCA in the UK. It's an efficient and secure, easy to use payment portal. ATFX is committed to providing competitive prices for their clients. Trading today is a very different game from when I got started about 9 years ago. It's become so much more cost effective. Back then you had to have a separate charting package, which was anywhere from £150 a month up to £600 a month. And that was just your charting package, not even your brokerage fees as well. Today, those costs are pretty much down into the pennies, so it's much more cost effective and accessible. And of course, we're using MT4 platform, which is great. It's pretty much open source with respect to the fact that people can, of course, add in their own. There's lots of outside tools that are available to be plugged in. And customer service contact details, should you need them, they will be available on the slide, which I will come back to at the end, all right, of the presentation. So I think what we can afford to do at this time is jump across to the platform. So I just loaded it up. And what I've done, you'll see, can I do a quick survey? Whoever's listening this evening, who is not familiar with MT4, with the platform? Just give me an indication. If it's one or two of you, it's not a problem. I can actually start to demonstrate this and take you through it. I'm going to do some of that at any rate. So what I've done is, of course, I've got MT4 as a platform is pretty straightforward. Okay, what's nice about it is that no matter who your broker is, you can be familiar with the platform. That's good. And it's pretty straightforward and easy to use. It might look intimidating, but it really only has a limited number of features, and then they just get replicated throughout. For example, I can right click on an instrument on the left hand side and create a chart. I can also go up and create file new chart, or I can click on this little icon here and create a chart. So when I say replication, you could probably remove about 60% of the buttons here because they're just replications. We've got the time frames up here, for example. I can right click and I can change the time frame on the menu. So I can do what I want. So also to give an indication of what I use, this is a standard layout. Okay, the way we work is we are focused, we are technical analyst traders. We are focused on price action. That is what makes our decision. We are not concerned with fundamentals. And so I throw on either a 200, but certainly a 50, 20, and 10 moving average. Okay, simple moving averages, nothing fancy. My focus is going to be on price action first. So simple moving averages. And then I've got a couple of indicators at the bottom. All right, these are the Rsi and Macd indicators. They are their pretty much default settings. I've changed the colors, but the number settings are the same. And the purpose of these is really, if you think about it, if you're driving your car and what you see through your windscreen, all the pedestrians, the traffic, the most important stuff is what you see on the chart here. That's price action, moving averages, horizontal levels, absolutely crucial. If I then look down at the dashboard of my car, I've got a petrol gauge or a speedometer. It's the same thing here, looking at the Rsi and Macd. All right, they're not essential for me to drive the car, but they certainly help. All right, and so I can, well, let's put it this way. I can drive my car without looking down at my speedometer or petrol gauge. I cannot drive my car if I'm not looking through the windscreen. Okay, so that's kind of just to relay the importance there. Okay, good. All right, so on the left-hand side, I have a list of instruments that I can trade. All right, and I can increase or add to them or remove them. So if I go to the right click and then have a look at symbols, I have all the tools that are available to me. And what I have done is, it's a personal preference. I've added in the ones that I want to use, which is most of them, but not all of them. Okay, so as professional traders, and this is something I really would like you to have at the top of the hour. All right, I want you to get a real sense of what actual trading is, technical analytical trading is, right? It's definitely misrepresented in most of the media I see. In fact, probably the most accurate representation is probably the TV series Billions. That's a pretty good one, or some of the older stuff, but it's not boiler room stuff. This is actual technical trading, right? So when we look at the charts, this is how we do it. So what I do is I'm going to be looking for strong trending markets, and then I'm going to be looking for an entry into those markets, and I'm going to take profit as I go and put a stop loss in case once I get in, it goes against me. Pretty straightforward in terms of concept. I want to have access to as many markets as possible, and it really doesn't matter what we're trading. It doesn't matter what the time frame is. It doesn't matter what the market is we're trading. What does matter is the market conditions. All right, that is absolutely crucial, that the market conditions are in our favor. So let's go and have a look. The first thing I want to do is give you a sense of not the right market conditions versus the right ones. We'll know them when we see them. You can see here I've got a variety of other little tabs at the bottom. So I've got different color layouts just for the purposes of demonstrating those. And I can also double click on these and it'll have them all rearranged into different windows if I wanted to do that. So I could tile them in a fashion like this, have them laid out that way. If I wanted to do that, I could also just go and have a look at a single chart. And I can save any colors or changes that I do as a template and load that up. I've got instruments on the left. I can add in indicators. Now, indicators are additional little tools such as the moving averages, okay, or the indicators at the bottom. So I can use little tools and throw them onto the chart as well. Let's say, for example, how the broker makes their fee per trade is usually a spread. It's the difference between the buy and the sell. Excuse me. In the same way that a real estate agent might tag on a fee between a buyer and seller of a property. So it's become very cost effective in terms of the fees of these have really, really dropped. Let me give you an example. I mean, the standard spread for the euro was somewhere between 2.7 and 3.6 when I started, which was only 8 years ago. It now sits down at 1.2, down to 0.2. So it's become much, much smaller and will continue to go smaller over time. Some of the other pairs were quite extreme. I think pound Kiwi was as big as 12 pips. Sometimes it's now sitting at 2 or 3 pips. So the cost of the spreads really has dropped to the point where it's mostly negligible. So that really is just to give you a bit of background around that. But for example, if I wanted to get feedback on that, there are occasional indicators which will allow me to do that. I can go and find them on the internet, drop them into the folder here, and then I'll get a spread indicator, for example, and I can just drag it and drop it on the charts. It'll give me live spread feedback if I need to know that. So the point is, there's some interesting tools that are available to us. Now, having done that, I'm going to be focused on, let's just use the last chart for now. I'm going to keep it at a daily time frame. Most traders, whether they are swing traders or day traders. So what is the difference between those two? Swing traders will generally, traditionally enter on the daily time frame. All right. When you get to the nitty gritty of it, we may also enter on the 4 hourly if we can get a better entry. All right. Whereas a day trader is generally trading during the daily session on the lower time frames. They could be getting on the 1 minute, they could be getting in on the 30 minutes or the 1 hour. And most of the time they will close out their trades by the end of their day and go home. All right, so in other words, they have no trades open, no open positions on their accounts overnight, whereas swing traders will have it. So what is the difference in terms of earning potential? Actually, no difference. All right, swing traders can make just as much as day traders, so the earnings potential is the same. What are the benefits of swing trading? Well, for beginner traders, certainly for the first 6 months, while they're mastering the platform, while they're mastering their technical analysis, it's better for them to trade the higher time frames because the market moves at a slower pace, which gives them more time to analyze and think and consider. It gives them fewer charts to analyze as well, fewer time frames, so it reduces analysis paralysis. Trading on the lower time frames, the market is moving at a faster pace. Some people might prefer to have no positions open overnight. I beg your pardon. I don't know why I'm stuttering. The point being is that the earnings potential as a job or whatever is no different. What I like about swing trading is if I want, I can check it only every few minutes, every 4 hours, or just check it for about 10 minutes at the end of the day. And there's either a trade setup or there isn't. Okay. And then I just have to check the next day. So for me, it's anywhere from 10 minutes to half an hour a day to just check if the setups are there, delete any orders that are now invalidated that haven't triggered, and update my stop losses on existing open trades. So it's pretty, what I mean by that is it leaves me with a lot of free time. Okay, and once you've been to the coffee shop and the gym, and watch Netflix, you get very bored if you don't have something else to do. So this is why I like my arrangement with Trade with Precision. It gives me a couple hours a day where I can at least talk to people. All right. Now, and I don't necessarily work in the city every day. So, okay. So now what I'm going to do is give you a very brief overview of a strategy which I can apply. Try and stop the dog from falling off my lap. And a very brief overview. So this is what I'm going to be looking for, and you can snapshot this if you want. I'm going to be looking, and this is very important, for a strong trend. Okay, so I'll demonstrate that quickly. So for example, let's go and see if I can find something really nice. Let's look at cable. Was on my watch list today. This is a great trend. This is a really good trend. Let me describe why that is to you. We have currently price is producing lower highs and lower lows. Okay, so these turning points are swing lows. The turning points at the top are swing highs. So swing lows and swing highs, and these are what I use as technical identifiers of a trend. We have got lower highs and lower lows in place currently. So if I focus on the last 20 to 40 candles, I'm really assessing what the current conditions are right now. Those are what the conditions are at this exact moment, and therefore I am determining whether there is potential conditions, whether the conditions for trades are suitable right now. And they are. I have the 50, 20, and 10, the averages of price heading in the same direction. This is basically the medium term average of price. The 20 and 10 together are the shorter term averages of price. So you can see that the medium term and shorter term averages of price is flowing lower. So basically the flow of price is heading lower. And we refer to that as momentum. I want a market that has clear momentum. It's actually moving somewhere and it's demonstrating that to me. Okay, trends of course go through phases where they consolidate or don't trend, and then they trend. Okay, right now this is trending, therefore right now this is appealing to me. Now, because of experience, I know that on the lower time frames there have been some really good trending opportunities on this. If I go straight down to the 1 hour or 30-minute time frame, there have been some really good trading opportunities on this. It's been on my watch list. All the other GBP pairs have also been on my watch list. Pound Swissy also looking very, very good. Also trending to the downside. That's because the pound is weakening. This is pound CAD. Beautiful. There's going to be a really nice entry opportunity over here. Why? Because while price did a really nice breakout from this level, it's most likely going to pull back into this area, which is where I will look for an entry opportunity to rejoin this trend. Okay, and so that is the trend so far. Looks nice and healthy, no issues over there. Pound Swissy looks good. We looked at that. Pound Aussie, beautiful. And this is on the 4-hourly time frame. On the 1-hourly time frame, this is, ladies and gentlemen, this is a picture perfect trend. These are the kind of conditions that we're looking for, and this is what I'm going to use to give an example. So this is a picture perfect trend. That is what I'm looking for. Very clear direction up or down. 2, all right, I want good interaction, okay, with moving averages. So let me explain what that means. The reason you can't get comfortable, I'm talking to the dog now, is because I'm busy working and this is not, there we go. So you'll notice here that the moving averages are all going in the same direction. And although that sounds obvious, it actually tells me a lot. It tells me that the flow of price is heading lower. And especially when they're almost parallel with each other, that just means it's stable and established. And here what I'm looking for, I want you to notice this, is that with very nice trends, price will interact with the moving averages quite a lot, especially the 10 and 20 together. If I treat the 10 and 20 together as a zone, as an area, price will head away from it and then back to it, and then head away from it and then back to it, and then head away from it and back to it. And those moves away we'll call extensions. It's like the market breathing out, then it breathes in again, and then it breathes out again. And that's normal. That's as the market participants are getting in and out of the market. I'm looking for entries when price is near or in the 10 and 20 moving averages. Okay, that's zone. So good interaction with the moving averages. I want price, let's call it near / in the buy or sell zone. That is the 10 and 20 moving averages. Sorry, and I will enlarge this text for you as well. So let's just make it bigger. Is everyone following me so far? Is this acceptable to you? Because we're going to go and look at the charts in a moment, but I want to give you a sense of what I'm looking for and what constitutes money-making opportunities. Cool. Okay, good. So I want good interaction with the moving averages, meaning I want to see price almost bouncing off those moving averages. I don't like using the word bounce, but I like that interaction with them. And the logic is very simple conceptually. I'm looking to get in to join the trend from the moving averages. If price has already left the moving averages, it's too late. It's like a train that has left the station. I need to wait for it to come back to the moving averages. And in that sense, the moving averages are a leading indicator. Price will come back to them and they will come to meet price. So this therefore becomes a good place to meet them. All right, and it's worthwhile knowing that when the trend is really strong and healthy on any instrument, you will have both swing traders trading it on the daily timeframes and the 4-hourly, and you will have other traders trading it on the lower timeframes, day traders. So there's a lot of, the analogy I use is like a kill in the bush. You can see you'll have your lions, you'll have your vultures, your jackals, your dung beetles. You'll have everything feasting on that particular kill when the trend is nice and strong. And the beauty of this is that we're trading with the big money. Okay, there's none of this conspiracy or voodoo rubbish. We are trading in line with the big money and actually benefiting from their big moves. Okay, so it's common sense, but you'd be amazed at how many people just don't trade with the trend. So the rule here is to do that. The next thing is we call this higher time frame correlation. This is absolutely crucial. Okay, this is crucial. Higher time frame correlation. Okay, the higher time frames will confirm or give us the prevailing trend. So I need to be trading in line with the daily and ideally in line with the weekly as a minimum. Even if I'm trading the lower time frames, statistically, if I'm in line with the daily trend, I will have more winning trades statistically. Okay, simply put, if the weekly is also going in the same direction, fantastic. Excuse me. So here we've got lower highs and lower lows, nice downtrend on the weekly, and that looks pretty good. So you can see here there's that downtrend on multiple time frames. That looks fantastic. Higher time frame correlation. So that means that if I'm looking to take a trade on the 30 minutes, what I would like ideally is to have the 1 hour and maybe the 4 hour also trending in the same direction, basically. So those are all good starting points. That's time frame correlation. 6, making sure that prices, so let's see what else. Okay, then what I'm going to be looking for is a small or small medium candle, okay, as my entry. All right, as my entry signal. Okay, so what that means is when price pulls back, all right, I am looking for, this is a beautiful picture perfect example. We just happened to be on the chart when that showed up. This is a picture perfect example of what I'm looking for. Price pulls back, it goes from bearish back to bullish as the bears exit temporarily, so they take profit, the buyers step in, price pulls back, a nice bearish candle forms in that sell zone. It's bearish, definitely bearish, and I would then look to place my entry. Okay, my entry is going to be 1 pip plus the spread. That's my personal preference. 1 pip plus the spread below the low, and my stop loss 1 pip plus the spread above the high. So the point is, the logic is that price should be turning at that in that area, and the nice little bearish candle in my mind tells me that the sellers are returning to resume the next extension, the next move to the downside. So I'm looking for a small bearish candle. I do not want a big candle. How do I know what's big and what's small? Well, I look at the chart and I can see where the biggest ones are. So that gives me a sense of what's a huge size candle. That's too big. It's dangerous. Generally, the medium sized candles will be about half that size, and a small candle will be about half that size again. So I'm looking for candles that are roughly any of these sizes here. They're all probably acceptable in that sense, and that then determines my risk reward as well, because once I get triggered in on the break of the low of that candle by this second candle, and my stop loss above the high, that twice that distance will be my target. So in other words, if this is my entry, this is called my position size or my account size, I need to go twice that distance just to get my first take profit, 1-to-1, 1% risk for 1% reward, and twice that. At this point, this trade so far would be 2-to-1, so that would be 2% up on that trade within 4 days, not the end of the world, especially if I've got 4 or 5 of those trades going. Remember that the way it works is we're looking for 2 to 5 trades per week, ideally with a net 1% out of those trades. Net 1% out of those trades, and therefore that will compound to about 5% per month. That's relatively realistic, but it does depend on me mastering my technical analysis and sticking to my strategy and being able to understand my strategy, and then basically what we call flawless execution. Flawless execution is when you basically do not mess with the process. You qualify your trade setup, you check that it works according to the strategy. Are the moving averages in the right direction? Is the candle the right size? Is it in the sell zone? Is it bearish? Is the higher time frame going in the same direction? Is there a nice healthy trend? Those are all my checklist points. Once I've qualified those, I then place my order. I wait for it to get triggered. I manage the trade to completion. I then put that in my trading journal. I do everything there like a good little trader. I want to swear, but I'm going to say that I do not mess with the process at all. That is called flawless execution. You do that often enough, it's like sticking to a healthy eating diet. You do it for long enough, and eventually it just becomes normal to do it. You don't mess with it anymore. So that takes effort to just do it. It's not that hard once you understand why you need to do it, but that's the plan. So I'm generally looking, and this is worthwhile, then what kind of reward to risk? Well, these strategies, or this one in particular, it's reasonable to expect 3-to-1 on average. Right? Sometimes with currencies, I'm looking for 2-to-1 or 1-to-1, meaning 1 or 2% what we call 1 or 2R. Okay, so basically it'll be 1% or 2% on average return per trade. But sometimes I get good ones. I might find that I get 4 or 5R, okay, 4 or 5 times that, a really nice big move. Okay, and sometimes you'll get false starts like this setup here. You might get triggered in and then stopped out and then get another setup and then it continues on. All right, and so that does sometimes happen. I'm focused on trending markets. With trending markets, my odds of success are much, much better. For example, here, I mean, there's a setup there. I may not have taken that, but that one has definitely yielded a good return. This one here would have maybe just made 1-to-1 and then potentially got stopped out over here. So that's a break-even trade. So we do get a mixture out of all these setups. This one here looks like it got triggered and stopped out, so that would be a losing trade. This one actually as well definitely would have been a losing trade. And then we would have not have taken any more, and then we would have made it back here. So sometimes a trade setup will have occurred when we're asleep, so we would have missed it, whether it was a winning trade or a losing trade. Just trying to give you a sense of what's real, what actually happens. So my expectation is out of every 10 trades, I'll have somewhere between, let's call it 1 and maybe 4 losing trades on average. Sometimes I have a really good week or a good run and I have no losing trades, but it's healthier for me to expect, let's call it 30 to 40% of my trades to be break even or losing trades, and the rest will yield profit. So that just gives you a sense of that, and basically it becomes a net profitable activity. One trade alone doesn't define you as a trader. Okay, look at them in terms of samples of 10 or 20 or 50. So there we go. So that gives you a sense of what I'm looking for. I need, very, very important, need to make sure that there are no news announcements. So I would look at an economic calendar. What I don't want to happen is for a economic news announcement to interfere with my trend. The beauty of this is I don't need to know why the market's trending. It doesn't matter. Okay, it really doesn't matter. In terms of making money from trading, it doesn't matter. What does matter is that if there is going to be something that is going to disrupt the trend, I might want to either not get into a trade or take profit on any open positions I have. And so the economic calendar, I'll be looking at high impact news if I'm trading the daily timeframes, and low impact, medium impact, and high impact news if I'm trading the lower timeframes. So that being said, let's start and have a run through some of these things. So I'm going to just clean up all these random objects, just quickly get rid of those objects there and just remove them. Because as I drop and drag different things in, this is going to start to get a little bit messy. So here we go. And what I'm going to do is start with the, in terms of my preferences, do I have preferences on different markets? Absolutely. Indices, equities, commodities, and then currencies. I like those. But my goal, ladies and gentlemen, is trend. Okay, so let's start at the top of the list, and I'm going to basically walk you through every single one here. Okay, so get rid of that. That's my list. That's the entire kind of, those are all the currencies, 27 odd currencies, give or take, the key indices and key commodities. So we were saying what's happening in terms of the commodities. Let's knock those out first. Let's look at US oil, put that on, and let's start to assess what's going on here. So although it is technically in an uptrend, okay, so it's producing higher lows and higher highs, the trend, the quality of the trend is not as good as it was here. I wish I could do Control Z, but this is a really good example of a trend. Darn, I can't undo things. I wish there's no edit menu with undo. So that is a great example of that trend, and there's no way for me to do this. I have to go through this tool. Sorry, it's a bit painful to go through this, but that's a really good example. Let me just get a quick drink of water quickly. Right, so the trend isn't great. Let's have a look at their weekly to get a sense of what's going on there. So you can see here the last 4 weeks have gone largely in the same direction. Can I do this? Will that work? Is it function? Nope. Sorry, I'm just trying to see if I can do the short keys here. No, forget it. So there's not a lot happening here, and the overall trend isn't great. We've had good trends in the past, good trends here as well. Let's see the monthly. So the monthly, wait for it to refresh. Also, there is no clear direction. So if you notice on the monthly, we were in an uptrend. Then price came down, broke the low, and now there's no trend, no uptrend, and it hasn't decided what it's going to do next. It's also sitting on top of the medium and shorter term prices. So basically the longer term picture for gold, the next 3 to 6 months, is currently unclear. All that means is exercising extra caution. Back to the daily is trending up, but it's also doing very deep retracements. It's not super strong, basically. If I look at the 4-hourly, it's going to be trending down. So if I was trading the lower time frames, there's some potential shorting opportunities, but they're not in the same direction as the daily. So basically, it's a little bit higher risk from that approach. And what it means, and this is super, super important, you can see here the price will do a move. It'll do an extension, retracement, extension, retracement. There are so many common errors that beginner traders make. And one of them is they finally start seeing the patterns that we're looking for, and they start entering correctly, and they put a stop loss in, and they start doing a lot of things right. And then they stop, they don't take profit. It's the most bizarre thing. They should be taking profit here and getting out, and then taking profit here if they get back in, definitely considering getting back in here, taking profit here. And they should basically be getting in and out, but for some reason they decide to ride it, and then the market comes back, and then it becomes either a break-even trade or a small profit or losing trade. So taking profits is as important as putting a stop loss in. A stop loss is there to protect the existing capital in your account, to reduce the damage to it from the losing trades we get, the statistical losing trades. We get two types of losses. Trader errors, which happen a lot more in the beginning, because how would you know any better? Because you just got it getting started. And statistical losses, which means that no matter who took those trades, they were never going to work out. Okay, they were going to be losing with you, whether you have been trading for 20 years or 50 years. They were false starts. You can often get price set, pulls back, starts, then pulls back again, and then carries on. That can happen a lot. False starts. Those are normal and acceptable setups and errors to have. Or the trend can just change. Whereas trader errors are just mistakes they should have known. There were warning signs. There was not enough evidence to take the trade. But in the beginning, you're not going to know the difference. This is why when I'm mentoring people, I can give them feedback on their actual trades. And that's what I do. That's my specialty. So I get people to that consistent stage. And that's what we do as traders as well. Everybody gets there in the end. You just don't want to get discouraged before it happens, because you don't understand why things aren't going the way they should. So the point is that I wanted to show you that this is a great quality trend. This is very clearly bullish, and oil was bullish at that point. It's now not looking as bullish, and so I'm a little concerned about its state. Let's compare it to UK oil, and UK oil is pretty much the same. So the trend currently is not that good. If it starts to trend really nicely, and in fact the behavior, if you think about a market as a personality, if it is stable and smooth, it's inherently safer to be around than if it's choppy. Then it becomes unstable, and it's very much like being around someone. So it means it's going to be more painful to interact with them. If you get involved with someone who's high maintenance or very problematic personality-wise, you can't be surprised when there's pain involved, emotional pain or psychological pain. It's the same thing with the markets, except there's an added bonus of financial pain, which sometimes happens with those people too. So we want to be focusing on very clear trends, and right now, although it is trending upwards, it is not looking super bullish. In fact, if anything, it's looking a little bit weak. If it comes down here, breaks these lows, I'll be cautious of that. What I am looking for is to take profit as I go, and that also means that I'm very cautious. So the stop loss is there like a bulletproof vest or a parachute to reduce the impact of the losing trades on our physical capital that we have. A take profit order is there to add to our accounts. That's its sole purpose for existence. Therefore, if we don't take profit, we cannot grow our accounts. Just can't happen. So just remember that. There was something else I was going to mutter. I was going to say, I took a snapshot of little comments I wanted to make, which was, what was it here? So these are just some comments that I thought were quite interesting. Okay, I haven't got it. Let me do this. Can I do that? No. No. There we go. So key competencies of top traders is to have a proven risk management strategy. That means stop loss in place. That means what we're looking for. Managing risk effectively can enable traders to survive in markets where outcomes are uncertain. Basically, by looking for these high probability trends and patterns, the odds are in our favor. Putting a stop loss in place means that if things do change once we're in the trade, we can get out with minimal damage, almost like paper cuts rather than losing everything. And it shouldn't be death by 1,000 cuts either. Defining the risk on each trade is an important component in achieving overall positive reward to risk, and well-managed risk can help to lessen the emotional stress of trading losses. Losing trades are never fun, but over time they happen less and less often, and they become more of an annoyance than anything else. So we need to know our risks, multiple sources. So I was talking about high impact news or news that might impact it. And this is the problem, is that a lot of people think they should trade by instinct and not strategy, not having a trading plan, poor use of stops, reckless use of leverage, not understanding our instruments, emotions, poor inaccurate position sizing, and too greater expectations. This is just normal. Everybody goes through that. That is the trader journey. And that is something that will impact everyone pretty much. So I'm a little bit cautious with oil. I would like to wait and see where it is by the end of the week. Once it breaks this low, if it does start to look a little bit more bullish, then I'll start to look for trends to the upside. But right now, it's looking weak on the daily in an uptrend and very bearish on a 4-hourly. And actually, the daily is in the right area to turn around. So this is the issue, is that now you can see here it's at a potential support resistance level, and therefore we might find that price actually finds support here and then turns around. So that's why I'm cautious of going short, because the daily is in an uptrend and the 4-hourly is in a downtrend. Then let's look at gold. Okay, so let's look at gold next. Now, gold has been very, very bullish. What we do need to be aware of is that it finally broke through a very significant level after many, many years, since 2013. Finally broke out. If you have a look at it on a higher time frame, this is the monthly, we finally broke through that. What I need is for price to pull back to test this level. I needed to break through, test this level to see if it wants to stay above it. Okay, once it does, it's going to be pretty cool. There's quite a bit of potential profit on this. Just going to highlight the next key levels, and this is what I'm looking for. So if we go down to the daily, you can see here price is consolidating. It doesn't really want to come back down, but it would be very healthy for it to do that. For it to come back down to test this level, what I would be looking for, and I would consider this a bonus. So when you hear about traders planning their trades ahead of time, this is what we do. If gold comes down to this price, all right, my expectation is to see a climb. Why? Because, well, look at the monthly. That's exactly what it should do. It's broken out. So if it comes back down, test it and carry on. That is a very reasonable expectation. You can see, look at the weekly price action. It's rejecting, rejecting, rejecting. Doesn't mean it won't go sideways and carry on, but it is just unable to continue at this point. So we have our first bearish candle, and therefore this might end up being a swing high. Price will come back down. This is where I'm expecting price to find support. It's a very nice area. If I throw in a Fibonacci measurement off the previous low up to this high, it overlaps beautifully with a 50% Fibonacci level. That is beautiful. So there's lots of support here. Moving averages are going to be in this area as well. The problem with it, though, is it could take 2 or 3 weeks, and this could be a trade I take a month from now. But what I do like about it, again, is if I can put my stop loss below that level and my entry. So if I get a really nice bullish candle, something like this, nice little bullish candle like that on that level, with my stop loss below it, it has extra protection from this level here, my entry above it, and you can see how much further we have to go before we get to the next level here. So horizontal levels are crucial, ladies and gentlemen. They tell us basically where the meat on the bone is, what the potential money is to be made on a move. Okay, so the monthly, weekly, and daily, we are trading, and what traders do is they make money between the levels as price moves from one level to the next. That's the meat on the bone, so to speak. Okay. So that's what we look to do. There's some really nice room for it to get up to that next key level, and from that one to that one. And when I talk about sometimes getting an entry in on the lower time frame, what I mean by that is when price comes back down to that level, I might find potentially in this area a 4-hourly candle, which is nice and small, and that same trade and entry could end up being a 20-to-1 or a 10-to-1 or an 8-to-1 instead of a 5-to-1, because I got a tighter candle or a tighter entry on the lower time frame. But the general gist of the trend is to the upside overall. I'm bullish on it in the long term. If price subsequently starts heading up here, I could still potentially look for an entry and maybe make some profit when it gets up here. So in other words, should price, it's doing a bit of an ascending triangle here, should price decide to go from here up to the top, I can still make money on that as we approach that key level. If price heads back down here, which I would really like it to do, and I think it probably will at some point, I'll look for an entry here. But both of these will be entries to the upside because the longer term trend is to the upside. So that comes from experience and confidence as well. So overall, that's what I'm looking at. I really do like the look of that. Let me go ahead and just remove some of these items. So I'm going to go ahead, get rid of the arrow, the fib, the rectangle. Actually, we'll keep the arrow and we'll just delete these. Then let's have a look at silver. So if you look at silver, hello, sorry up there. Look at silver, it's a slightly different picture. Silver's longer term trend was kind of more downwards and sideways, but it's very unusual for gold to head up big time and for silver not. It's okay within a small, reasonable amount of range for silver to head lower or to go sideways, or gold's doing one thing. They're not 100% correlated. But if gold became very much in favor again, so would silver. So my expectation certainly is to see price break its previous highs over here. We zoom in. Once it breaks that, we'll be in an uptrend on the monthly, and this downtrend will be finished and over, okay? And therefore I can start looking to go long. At the moment, it is looking more and more bullish. That's the weekly time frame, producing a low and a high and a high low and a high high. Look at it, it's on the daily. The daily is trending up very nicely now. It's not the best quality trend I've seen, but it's certainly more bullish than bearish. And here is the 4 hourly as well, starting to trend. So the 4 hourly is starting to trend, potentially going to retrace. Is it going to come back into a key level? Possibly. This is a little bit messy here. In terms of support resistance, there's a level, and then there's a bit of another one down about here. Okay, so anywhere in this area would be looking good for price to come back to. Okay, it doesn't always have to stop here. It could come down a bit further and still be very valid. So then silver, so gold is so far out of the 4 charts we've looked at, gold is really good. But again, and then the other question somebody might ask me is, would I trade gold to the downside? Would I trade it down first before trading it up? Potentially, but that trend would have to be really good, and that would be on the much lower time frame. So 30 minutes potentially, waiting for price to head back down. And in terms of psychology, I have to take ownership that I know the longer term trend is to the upside. I know it is. So I'd need that trend. Probably I would want the 4 hourly trending down. I want the 4 hourly producing lower highs, lower lows, and trending beautifully down. And right now, it's arguably still within a range. Okay, so it's still within this range, and therefore it can do anything at once within that range. It doesn't have to be orderly or behave. All I need to do is accept psychologically that is higher risk. Okay, so that being said, let's move on to the other charts. So gold looking really good for the future. Oil, I want to sit back and wait on those. And silver is potentially also looking good to go long, even this week, possibly. So the next thing I'm going to do is have a look at the currencies. Let's have a look at the euro dollar. On the daily, you can see it's got no clear trend. It's a complete mess, actually. If you look at it here on the weekly, this is just junk. Okay, this is not tradable. This is a guaranteed way to lose money very fast. Why? Because the conditions are choppy. There is a good balance of bulls and bears in here. Not only that, ladies and gentlemen, but currencies, please note this, is always two parties pushing and pulling against each other. So we might be sitting here going, well, this is the euro, when in actual fact, it could be the dollar versus the euro. So the dollar is creating part of the problem as well. When we bring in cable, we get a different scenario. This is weaker. And if I look at other GBP pairs, which we've done, you will see other GBP pairs are looking nice and bearish. So these are really good trending opportunities for me. These are my favorites, the GBP pairs at the moment. Let's see what pound yen is like. Okay, if all the charts are trending lower, that is a really nice correlation, which tells me the common aspect of that is GBP, and therefore it's weak. Okay, so that tells me it's relatively safe to trade it because it has a clear direction where it's going. If I go to the euro pairs and look at euro Aussie is not trending down as much, not as good. Euro CAD trending a little bit lower. Now this is interesting. There is a support level here that we broke through. So again, at some point in the future, it's reasonable to expect there to be a potential sell opportunity at that level. Okay, so dollar CAD looking good to go short. Let's compare that. So again, I have to delete some of these objects. I have to get rid of some of these things on the chart. There's just simply too many of them. And so, because otherwise they just clutter it when I'm doing all these different things. So I'll tell you what I'm going to do. I'm just going to delete everything. Just clean up the charts. Okay. There we go. So there is a potential level of support. Price can come back to test it. Let me have a look at other CAD charts and see if they're also heading lower. So in other words, is this a once-off or is this is this the case? So dollar CAD, what's happening there? Dollar CAD heading a little bit lower. currently in the last 5 or 6 weeks. Let's look at Aussie CAD potentially. Aussie CAD trending down beautifully. Look at the moving averages flowing down. That looks pretty good. And so there's some potential there. Pound CAD, obviously we saw that that's already heading much lower, so that's great. So if you combine the two, the weakest charts, you'll get some really good trending. I will get some really good trending opportunities. Now CAD Yen and CAD Swissy, because we swapped the CAD, they'll be heading up potentially. So CAD Swissy might be going up. It's not. A big reason for this is largely because the Swiss franc doesn't really go anywhere. This is basically not really worthwhile trading. And you can see that it's been doing this going back even 2017. So generally speaking, I'll keep an eye on CAD Swissy every other day, but I don't expect this to provide me with any great trading opportunities, certainly not in the next 10 days. All right, CAD Yen, let's have a look. CAD Yen also not trending as well. So ladies and gentlemen, what I want to convey here as well is the selection process, picking stuff that has great trends. So CAD Yen versus Euro CAD even, for example, I would rather trade this. Okay, it should have a stronger trend to the downside. Also, lower time frames, even for certain traders down onto say 5 minutes, intraday traders would have had some good opportunities here. You can see yesterday, most likely, very nice trending opportunities. Okay, currently, and so also the question is, well, would I trade it now? Not right now. It's actually retracing. If I look at it, it's on the 30 minutes, the 1 hour, I can see it's just pulling back in, but there's a nice bearish candle setting up, and overall it's looking nice and weak. That might well be exactly what I'm looking for. Okay, I like this. The 1 hourly is in a downtrend. The 4 hourly is producing a nice little bearish candle off a level of resistance and support. So that's pretty cool. Maybe even a Fibonacci level. So let's see if there's anything else there. So if I measure Fibonacci, is there also that? So let's just go measure that. There we go. It's fine. It's in the zone 50 and 60, 618. Again, a zone. It's also in the zone with the 10 and 20 moving averages. So there's more evidence supporting the idea that this is going to likely to hit lower rather than higher. Then we can. All right, so that looks pretty good. So when we were going through the Euro pairs, I started off with Euro Aussie. I'm trying to see if the Euro pairs are also trending lower. So in other words, we looked at Euro Dollar. So Euro Dollar, I was saying, is a little bit too choppy for me. Not really liking the look of that. When I go to Euro Aussie, it's heading a little bit lower. Okay, that's cool. So there's some potential trending opportunities there. Euro Kiwi, I want to compare Euro Aussie and Euro Kiwi because they're kind of similar. You can see the similarities in the charts. So that tells me that if Euro Aussie and Euro Kiwi heading lower, that it's possibly Aussie and Kiwi that are doing something. If the Euro is weakening against the Australian dollar and the Euro is weakening against the Kiwi dollar, it's possible the Aussie dollar and Kiwi dollar are strengthening. So how will I confirm that? Let's go and look at Aussie dollar. Is it going up or down? It's climbing. Okay, it's got some strong resistance. No doubt it's encountering resistance at this level. What's Kiwi dollar doing? Kiwi dollar is also encountering resistance here, but it is actually trying to climb. That's pretty cool. So let's continue. So Euro CAD we looked at. So Euro Aussie, Euro Kiwi, Euro CAD looks very, very nice. So if I go through this, what's on my watch list in terms of that? GBP pairs. Okay, nice. CAD pairs so far, but really kind of GBP CAD, Euro CAD, they all look good. Okay, that look pretty cool. And let's carry on from there. So what's happening with Euro Swissy? Euro Swissy is trending lower, but it's not as nice. Looking at it on the weekly, it's just managed to break out of this. And if you look at it on a monthly basis, you can see it hasn't really moved a lot. There was intervention here a while back, hasn't moved a lot. It's more bearish than bullish, certainly leaning to the downside. But to me, it doesn't look safe to trade. All right, it hasn't got that strong, clear intention to head lower. Euro GBP. Euro GBP is climbing. Okay, to put this into perspective, this is pretty much stuck within a range for a while. At the moment, the euro is strengthening. We know the pound is weakening. You've seen the pound weaken against pretty much everything. And the euro is pretty much managing to stay where it is for the most part. It's certainly not heading lower like the pound. Therefore, it actually makes sense that euro GBP is climbing. This behavior you might be interested in. In the years I've been trading, the last 2 or 3 years have been very different for some reason in the currency markets. This kind of behavior is very unusual. It's very normal now, but it used to be very unusual back then, for the market to completely just trend and trend and trend without taking a breather. This kind of behavior, which was much more normal. So the market was always moving, pulling back, moving, pulling back. Now it just runs and runs and runs without a proper retracement. And that is a change in the markets. It's not controlled by anyone. It's just a subtle difference. So Euro GBP is looking nice and bullish, but it is coming into some strong resistance. So therefore, I'm cautious. Euro Yen looks as though it wants to head lower. Now the issue is that the Japanese do trade their own currencies. They're very good at trading. They read candlesticks. They invented candlesticks. They know how to read it, and they trade their own currencies. So they're very capable of controlling to some degree the balance of their currency against other currencies. Okay, and they do that by focusing on their strongest trading partners, which is currently the US. And so Euro Yen and a couple of other yen charts, mostly heading sideways. So not really loving the Euro pairs as much. GBP pairs look good. Let's have a look at the Aussie pairs again. Aussie CAD trending lower because of the CAD part of that. Aussie Swissy starting to reverse and head up a little bit higher. So not loving it again. I don't expect every market to be trending, but I just want to get a sense of what's going on here. And Aussie Yen is actually busy changing direction. I hope you can see this. It actually wasn't a downtrend. It's now attempting to turn around and switch from a downtrend into an uptrend. Most likely once it breaks this level, comes back and retests it, it'll head higher, which is again an indication that the Aussie is strengthening. Aussie Kiwi will be, if both of them are strong, they'll be going sideways. And you can see here, because both of them are showing some strength, they're going largely sideways against each other. Let's look at Kiwi CAD and see that. Kiwi CAD was trending lower. It's now starting to trend higher. Potentially once it breaks this, that downtrend will be done. Kiwi Swissy is looking bullish. There we go. Kiwi Swissy starting to climb. Kiwi Yen, wait for it to refresh, also starting to climb. So, and by the way, although I might trade intraday or swing trade, I can do that just by looking at the daily. I can get a sense of what's going on. So the question is, I've just been asked the question, will I be covering any fundamentals? Other than the fact that the trade disputes are ongoing, Brexit is ongoing, there's not really much that's going to change on that. So those are still the fundamentals, the same issues. Interesting, but in my opinion, they were to a large degree unnecessary. I don't think they were required. I know there's some concerns about China becoming so big economically, but aside from that, it just seems as though it's unnecessary. So there's no real fundamentals to be covered at the moment. Certainly nothing that's going to really massively impact the charts over the coming weeks. The trends that I'm talking through now are likely to continue as they are. Dollar CAD, we spoke about potentially heading lower. We've got dollar Swissy just running through the last these before we look at the global indices, not really trending as much as so far again. And dollar yen got no clear trend. You can just see here no clear trend at the moment with these. Let's have a look at CAD Swissy. Okay, CAD Swissy coming up into the top of these resistance areas. You can see now, surely, once I start looking at the charts, you can see whether they're trending right off the bat or not. They don't look as appealing. If you look at these charts, they're not. And so again, my preference is going to be at any time. This is now starting to trend. That looks a little bit better. So CAD Yen, Swissy Yen, not great. So you can see a lot of these very deep retracements. That's when here you've got you've got 60-40 bulls and bears, whereas with a really strong trend, it's like 80-20. So that's the issue. Dollar Sing, just for fun, dollar Sing, not really trending at the moment. So dollar Sing, US dollar versus the Singapore dollar can trend very well sometimes. So that's all of the currencies so far. It looks as though maybe the Aussie and Kiwi pairs might offer something, some of the CAD charts, but GBP being the outright winner on those. And so when I said CAD, maybe Euro CAD or GBP CAD as well. So I'm going to have a look at the indices in the 3 minutes we have left and just see what the state of those are. I'm going to have a look at your comments as well. How do the potential negative rates impact the future? At this point in time, there are bigger issues. I know that everyone's watching the Fed in the US to see how they're going to respond, but the markets are still bullish. They're likely to be bullish for a while and volatile, but we're not likely to have a bear market anytime soon. We are due for a correction, make no mistake. We're due for a bit of a breather, but we're not really going to have a bear market, a really negative recession or anything like that. Certainly not for the next 6 months. And so those whatever the outcome of those Fed rates are, whether they make those changes, that's already being taken into account by the big money, so they'll be positioning themselves either way. But it isn't necessarily going to rock the markets because everyone's already considering what the potential impact is. It's the things that the market doesn't see coming that rocks the markets. When they see something coming up ahead, they position themselves, and therefore the reactions are normally one of two, for example. So, and you're looking at a reversal on pound sec. What are my thoughts? GBP sec, I'll have to just go and load that. And I notice we've got a couple of minutes left, so I just want to be aware of that. So GBP sec, let me just go load that up. Blah, 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 blah. Why is it not included in mine? I'm not sure why. I'm sorry. It's not included on mine. So, but again, I'd have to have a look. If it's trending lower like the other GBP charts are, then we'll have to see. I apologize, I don't have time to, in this, I can't find the symbol and I can't seem to get through to it. So what I want to do here is just look quickly at the weekly for the indices. We're breaking through to new highs. Overall trends looking relatively healthy. At some point, we do need to have a breather on them, but not a bear market per se. We actually, 2018 seems to have been most of our consolidation, and we will have retracements on the daily that will happen, but just highlighting that for the most part, these are looking very, very strong at the moment. Some good trends even on the lower timeframes. You can see that interaction. So again, some really good trend flow opportunities, or at least that strategy that I've been talking about. Even the weaker ones, the FTSE 100, the DAX, the Germany, they're also climbing, although not as strong. So that all that really means is that over the next few weeks, we're likely to have a bit of a breather on it. Let's look at the French one. This is the CAC. So that's also still trending upwards. Fine. Let's look at the Nikkei. This is Japan. Japan is now starting to go into a downtrend. Okay, to close the gap potentially, not looking as bullish as the rest. All right, let's HK will be a big one. This is Hong Kong. That still looks bullish. So the market is looking more bullish than bearish at this point in time. And the ASIC here, Australia one, is starting to head into a downtrend. It's basically looking for a weekly retracement. That's what it wants to do here. Pull back into the moving averages, but that trend is really nice and healthy. So shorter term, my expectation is to see some corrections on the weekly back down to the moving averages, which means a temporary daily consolidation or daily downtrend. But for the next month or two, my expectation is still to see these markets continue to climb. And the market is just pretty much enjoying it. It's thriving from it. There we go, ladies and gents. Let's go back to that slide, finish on the last one here. I know there was a lot of information, especially for you beginners, but I do hope you appreciated it. The key thing that I wanted to get across today is what am I actually looking for in terms of trading opportunities, which are the markets I'm looking for. And remember that with all those trades, I have a stop loss in place and I am avoiding high impact news. So should the market conditions change and they start trending in the other direction, I will simply start trading in the trend in the other direction. Okay, so there's no pain and suffering in that respect. And ladies and gents, here are the contact details. And I want to say thank you very much for your time. What I want to do is wish you a wonderful rest of the week. I hope you're enjoying the summer as much as I am. It's not the best one I've ever had, but it is definitely better than it was about a month ago where it was still quite cold and rainy and wet. And there we go, ladies and gents. I'm going to end the webinar. It's going to hoof us all out. And I want to say thank you very much for your time.